Think we're live. Um, all right, we are live, guys. Welcome back. Good to have you here on Hero Labs Live on a slightly adjusted schedule today. After a bit of a turbulent Monday, caught us in the lab scrambling around, and we decided to push it back one day so we could be focused and relaxed. And here with special guest today, BeatPaloski, who I guarantee you've never heard of because he's on Twitter. He hasn't ever tweeted once. And so perhaps today we learn a lesson that some of the smartest people in the space, some of the ones that are making the big moves, doing the crazy alpha stuff, they're not prioritizing telling everyone else what they're doing. So I'm very happy to have him here in the lab today for this interview because it would be, I believe, the first of its kind. And he's going to walk us through his entire process from start to finish, kind of shedding some light on what he's been doing in the DeFi space since he moved into it. And based on the initial phone calls I've had and the time I've spent chatting with him, I'm just blown away. In fact, it did two things. It inspired me to want to learn more, and it scared the shit out of me thinking, okay, this is what I'm up against when I'm trying to scrape APYs and profits out of these liquidity pools. So happy to have him on here today. We're going to just do a very quick run through of some charts while we get our audience sort of rolling in here today. So let me just make sure that I've got the chat so I can say good afternoon to everybody. We've got Sohail. Good to see you. Dave Millett and Scott and Alex the Permabull. Welcome back, guys. We're sitting at 9, so let's give it a few minutes. I'm going to go over a few charts. I just want to make sure that our tweet goes out. We had our pre-tweet. Hello, we've got a long name sitting in TradingView. Mota Dayokyo. I hope I didn't butcher that too badly. Definitely did a little bit. Hello to you too, sir or madam. And I'm going to just make sure that we are live. Yes, on Periscope. Excellent. And ping this over to one other lobby here. All right, I'm calling you a DeFi guru over there on TRI Lounge. Let's see. Okay, so take a look at the markets, guys. We got the Dixie sitting at an ominous level, threatening all markets. So I want to pull up a few charts and just take a look at what I'm seeing. I think lots to cover. Let's get over to this application. Perfect. So I think we should start. I mean, the Dixie has not been relevant for a few weeks because it was in a pronounced downtrend and kind of going through this air pocket. And when it's moving through this kind of a spot, it's just stops being relevant. That trend will continue. Okay. Make sure my mic is clear as day. Dirty Sanchez, good to see you, brother. Better than most. Good try. Okay, appreciate that. I almost nailed your name. Oh yeah, and I better get the Periscope chat up. Often forgetting to have that in front of me. So let's go. Hello, Periscope. Good to see you guys. All right, guys. So look, the Dixie is at a key level, and that's you can't ignore that. For as much as we want to, perhaps assume that this downtrend will continue. The Dixie peaked during the peak fear of March 13th and 16th, and has basically just been dropping out. But as you can see, it's at a key level. This is where, technically speaking, you would be watching for trend reversals, and we have to keep that in mind. So don't be surprised if, regardless how this level resolves, if it resolves bearish, I would expect at least some resistance here, or in this case, support. So don't be surprised if we consolidate here for a bit, and that might be, and this is the exciting part, that might be the speed bump on Bitcoin that a lot of people want to see because they're holding altcoins. They want to trade altcoins. They want to see altcoins break free. And so on that note, I want to also point some attention at Ethereum versus Bitcoin. Put this out today, looking at a couple scenarios that I could see over the break. I don't know that I don't really see the bearish scenario from here directly. I think it's got to be a bounce of some kind first. But we've just swept the lows, and I would expect at least a few days around here, and then we'll see. We'll see if the bulls want to come in. Obviously Bitcoin's been leading, Ethereum's been lagging. Do we flatline here and they continue to mirror each other, or do we see some separation? I am naturally leaning bullish because I think Ethereum, bullish throwback. It's just been respecting these levels. It's in an uptrend. It hasn't nearly reached its all-time highs. Bitcoin, for sure, there's a case to be bullish on, very much so. But I do see a potential for a pivot here for a number of reasons. First of all, we got the Bitcoin dominance sweeping these highs here, hitting this kind of resistance key level. I mean, this is a very important spot. If dominance continues to rise from here and Ethereum breaks down from here, that's going to be a big move. It's not likely to be like a stop and go back. It should be a fair, it's going to break a very high time frame structure. So it's kind of a do or die level. So I don't know how I feel about it. For now, I'm leaning bullish, but I'm not longing Ethereum here versus Bitcoin. I do hold some Ethereum. I am long by proxy of that, but I hope that captures my thoughts. I mean, so this is what I want to look at on the dominance chart, right? So we had this descending broadening wedge. We've now poked up through. This looks really bullish. It's very hard from this perspective now to look at this and say we're in a downtrend after that daily close. So, I mean, it very much is do or die. So perhaps I'm leaning bullish because I'm biased. We'll see. But in general, let's take a look at Bitcoin. Nope. Let's take a look at this Bitcoin. Nope. This Bitcoin. This is what I see for Bitcoin. We don't have anywhere we can look left to find resistance. So based off the last impulse up, we've got a little fib extension here. ABCD harmonic. Could travel up as high as that, and it wouldn't be out of the ordinary. Right now, we're in a short reload zone, so watching this level very closely. This is either an excellent place to be hedging your entire portfolio into a boring, quiet New Year transition, or we're about to blast off. So keep an eye on this box. If we break down from here, bounces are for selling, in my humble opinion. That's what I'll be doing. And if we break up from here, I don't know that I want to buy in that zone necessarily, but if we break up from there, I do see a pretty decent chance of continuation. So it really depends how many more billionaires want to buy our bags this month. With that, guys, we are up to a nice little crowd in the chat. So we're gathering. We got Bodhi Wildheart and Kavark joining us. Good to see you guys. I would like to bring in our guest today. So I will flip back the camera. Yeah, my shot on the Wirecast Live is frozen. Is that? Are you seeing the live shot? I'm not seeing it. Okay. All right. Well, let's see then. So I don't see the live shots. I don't actually know when Nathan's in. So you just tell me. Perfect. Okay. Well, welcome to the stream. I am shooting 20 seconds blind into the future here, as our dashboard seems to have frozen on my view. So, anyways, good to have you. How are you, Beat?
Great. Yeah. Thanks for having me.
BeatPaloski, welcome to Hero Labs Live. It's been a few weeks in the build up for me. In just the few weeks that I've known you, you've taught me so much, and you've got me interested in LPing. I've been obsessed with Dollar Protocol in particular. I know that's one that you initially passed on, but as far as like just the idea of sitting on a bag of ETH, sitting on some stable coins, and using them essentially as a trader, I never really thought of it that way. I thought of LPing as this boring thing where you just put some money in, and in a year you might have 10%. And I was like, well, that's whack. But you've actually managed to flip my narrative in my head about that, where with the right strategies, with the right approach, you can actually be turning around a 40% return in one day on a bag or higher. And that obviously speaks to me because as a trader, I sometimes sit in positions for weeks or months to capture that kind of a gain.
Yeah.
Maybe start off like telling us a bit about yourself. Who are you?
Well, let me do one point there first. So when you're talking about like those 40% yields, I mean, you got to remember again, those are the risky ones. Those are hard to capture, and they still have the same risks as pretty much any other trade. But as you had mentioned earlier, taking off a bit of your capital as we approach some Bitcoin resistance here. Some of these DeFi strategies are really a great way to sort of still generate, a good return on capital, even though you are, sitting in a stable coin or, reducing your exposure to the actual crypto market. As for myself, I've been in crypto since 2015, 2016. I was big into the ICO phase back then, and 2017 came around. It was a really big year for everybody. Made money, and then kind of settled down a bit over the break where we had that bear market. Wasn't doing much trading, did some traveling, and then this summer came around and really got me back into the market quite a bit. It was kind of the DeFi summer, and I had been living with somebody who was one of the original DeFi OGs. And he had, over the previous year, sort of piqued my interest into the market as a whole. And then, as this summer really sort of developed into being a DeFi boom, I dove headfirst into it and had a great summer. And now I sort of focus all of my energy into the space.
Absolutely. Yeah. I think bull markets and new innovations and opportunities tend to have that effect on us. And,
Yeah.
and I saw that in a lot of my private trade groups as well. Like the activity really picked up this summer. It was nice to see a lot of friendly
Yeah.
faces that I hadn't seen in a while. And, you can say what you will about people who disappear when it's not the bull market, but like at the end of the day, choose when you want to be participating. Do you want to be participating when it's, stormy seas and tough navigating, or do you want to
Yeah.
just kind of preserve capital, enjoy your life, travel a bit, and then jump in when it's hot? And I do a bit of both. Admittedly, kind of sat through most of the bear market trying to trade it, but I can't fault anyone for stepping away for a bit. And right now, I think I think we're heading potentially to like this DeFi 2.0, where you're going to start to see these second layer applications of DeFi and these culminations of all these different aspects, a little bit like Wi-Fi is kind of gathering so many troops, so to speak, and partnering and building this like super machine. So what I'm really excited about when I talk to you is hearing about the specific sort of strategies you do, because at the end of the day, it's all about yield. It's all about, return on investment for the risk taken. And you've got quite a number of strategies that help you chip away at sort of the fees and the costs and then boost your APY. Do you want to tell us a bit about that?
Yeah, so I like to sort of I think of DeFi as really any other market sector. You have your own personal sort of risk portfolio, and it's really dependent on what kind of risks you want to take and how that looks for you. In like the traditional market, that would sort of look at your allocation to more higher volatility investments like altcoins, versus your exposure to Bitcoin or Ethereum. And in DeFi, I like to sort of keep my portfolio in the somewhere like 60-40% range to 80-20% range, with the higher percentage being more stable, lower yield strategies like just sticking money into a yearn vault and getting at 20, 30, 40% APY is, that's amazing if you think about it. Earning that much yield on a stable coin, it's like, your bank account gives you, 0.2% on your savings account. And this is essentially a savings account for your crypto that's generating, 20, 30, 40% a year.
So that's your baseline. That's kind of where you sit when you're just
Mhm.
not actively using the capital.
Right. And also, and then the other part of that is trying to look for more discretionary, extremely high yield farms. Farms have tapered down a little bit, although I think right now we are seeing a bit of a revival in the farming scene with these new algorithmic dollars. That's been exciting for me, kind of tracking those developments.
I've been loving those. And I,
Yeah.
to be honest, I've only played in share, but it did so well. It dwarfed anything that I made over the previous part of the year, and I had a pretty good year. So, it's kind of incredible. There's actually one other you mentioned that I haven't fully gotten into yet, but looking into it this weekend or this week.
Yeah, basis dollar and basis cash are sort of like they're all sort of built off of DCET dollar, ESD. That's the biggest one. It really just ballooned, their TVL and everything just massively ballooned, and after that sort of came all of these new, I don't want to say copycats, but following projects that had similar theses and had similar utilities, and everybody's kind of here to make money, and so capturing, bringing back those 3,000% APYs was really, really nice to see again.
Yeah.
and those projects really supported it, and I enjoy getting those very, very high yields off of stable coins, really.
Yeah.
That's in my mind the best way to generate yield is to do you know uh, anything other than the coin that you are farming. I never like being the LP for the farming coin, because you're just consistently getting dumped on and dumped on. So really, any project that provides a different option than just being the farming coin ETH LP is what I look for.
Okay, so that's a good starting point, I guess, as far as like a checklist of things to consider
Mm-hmm.
for anyone who is like myself, trying to learn this stuff a little more to maybe diversify my presence in the market away from just Binance coins, TA, futures, FTX, whatever, which I
Mm-hmm.
love and I trade those. But I love the idea because that can be fairly labor intensive, especially if you're trading the 1 hour, the 15 minute, the 5 minute.
Yeah,
But
absolutely.
what you're describing to me and what I've learned is that, I parked some liquidity in the share protocol, the dollar protocol. And I wake up the next day, I have 2,000 more share tokens. I'm like, oh,
Mm-hmm.
and they're not like this like farm token that's just dying. Like they get a pretty decent base now, around 20, 30 cents. So overnight, just printing money, and the risk obviously is total in the sense of, brick, bug, mint, flash loan, but like
Yes.
outside of those
Well,
risks,
it's very binary.
the downside,
It's a
yeah.
very binary risk. It's either you get hacked or you don't.
Yeah,
Those are
yeah, which is a
that's how I
terrifying
look
thought.
at it.
Yeah, which is a terrifying thought. So one thing I would recommend to anyone watching is, do your best to get into a free position as soon as possible.
Mm-hmm.
So in my case, the liquidity I was providing on Dollar Protocol was money capital that I had taken out of the share from the initial, because I was fortunate enough to get in at 1 cent. So I pulled out my initial, took out some more, used that for liquidity. So if we get, any kind of total loss, it'll suck a lot, but
Mm-hmm.
it won't ruin me. And that's that kind of position you want to put yourself in as soon as possible, even if it means missing some of those longer term compounding gains that you know from the start. So beyond selecting your protocol, avoiding the farming token within, looking for anything that you can just use stable coins to stake and get a reward. Um, what are some of the other strategies you employ when you're looking for new stuff to farm, essentially?
When it comes to new things to farm, I like to have the code audited before I enter. That's really important. You can sort of partner with like an auditing firm, and of course they won't do like a full on sophisticated audit. Those cost tens of thousands of dollars.
Yeah.
But for like 500 or $1,000, you can have an auditing firm or you just basically hop in a Telegram chat with them, and they'll look over the code and basically say like, okay, we don't see any major flaws here. You're not your odds of getting rug pulled are pretty low.
Commence aping.
Yeah.
Yeah.
So you don't really you want to have them just look for any glaringly obvious exploits or bugs in the code, or like a mint function where the devs could just go ahead and mint their entire supply, and
Yeah.
you know
The old soft rug.
yeah.
So you have your own private auditor, so to speak. And if you spot something coming down the pike and you just want to get into it, you send that off to them. What's the turnaround time on that?
It depends. It's usually like it can take 5 hours, it can take 24 hours. It depends how really deep you want them to go. um, Also having like even a friend who is really good at coding, really good at computer science, if they feel comfortable looking it over for you, that could even be an avenue if you don't want to have that much capital invested in trying to get it audited. um,
Yeah. Or even to
and
pool it, right? I mean, there's always groups you could be working in
right.
for some of the smaller accounts that are looking.
Right. And also kind of another thing that also seems to work is watching for like a general consensus of other smart, like you look for smart people, large wallets, on like wallet trackers or like Nansen.ai, which is a great tool for DeFi. um, if there's a consensus of larger players and smarter people in the space, you can almost guarantee that they've done their research, and if they feel comfortable with the protocol, you're probably pretty good as well. um, And so
That's an interesting take. Yeah.
that's another real tool you could use to look at and evaluate these projects. Are like, is there a general consensus with people that I think are intelligent and know what they're doing? Like, do they think this is a good project? And if so, you can usually bet that you can move in there.
Yeah. No, I like that. We could call that the redneck audit. Right? You getting it? We going? We going? Yeah, we're in. All right, go get it. And you just wait and watch for the certain people to get involved, and you say, okay, well, this guy's fire. I've been watching, and that's actually the thing that has really opened my eyes in the Uniswap world. And I mean, even with Dollar Protocol, there's a new whale that just kind of moved in like 2 weeks ago, and we've been watching what he's doing. He's accumulating this, he's accumulating that, he's dumping this at key levels. Like, he is just controlling the market. And today he just minted, an insane amount of X bond during this negative rebase, and he still has a lot of USD, and he's pushing price right back down. And I'm just thinking to myself, man, I hope this guy doesn't just try to ice us at neutral for 2 months, because that would be the smartest thing to do. He completely controls the supply now. I imagine the numbers on how much of the existing USDX is actually circulating, I'm sure he owns most of that supply, because I think everyone who played today was to mint. So, but the point being, like, you can actually spot the movements of these guys and track them and learn from them.
Yeah.
In your case, it's about, obviously the highest the APY is right away. So speed is a big factor, and you can say in some cases you're bypassing your audit wait time.
Yeah, and that's an issue I've run into, and I think large people with larger capital, will always run into this issue. Is sort of like, you can see these 16K% APYs, and as soon as you sort of, even like with smaller stacks like 100K, you'll really crush down that APY, and it's trying to find some of the protocols that are a bit more stable with that, that handle that kind of crazy TVL. That's better for larger players, but there's still plenty of alpha to be extracted for smaller players as well, if they're moving faster than everybody else.
Yeah, absolutely. I have a question. So Bodie Wildheart would like to know if you have an opinion on if the new KYC laws on private self-hosted wallets will have an impact on the DeFi space.
I don't think so. Again, this is not legal advice. This is not financial advice. These are just my own opinions, but I really don't think that any of the new proposed laws will have a tremendous effect on DeFi as a whole, because they're really not enforceable, in the way that, like, the only issue that I could really see is you wouldn't be able to interact directly with a DeFi smart contract or protocol with a like Coinbase wallet. So you won't be able to interact with Yearn if you are using like your Coinbase wallet to interact with it. That's the only real issue that I could see come up, but I don't think as a whole it's really going to have much of a regulatory issue on the space. I know a lot of people were sort of waiting for that regulation to become more clear and come out, before deploying a lot of their capital into the space. And I think now that the regulation is out there, I don't think it was much better than people expected it to be. And I don't think it's a concern for the DeFi space. No, I sent you, I shared with you a good picture that kind of depicts my thoughts on
yeah, I remember that.
How
actually,
it looks.
I'll pull that up. I put it right onto my Twitter. I said I'm stealing this. So I mean, on the flip side of that, as far as like, okay, so maybe there's no concerns about being shut out of the whole system. Let me put that picture up here. Can I? Oh, okay, I can undo that. I'd like to talk a little bit, obviously, today about algorithmic stablecoins, because as far as like a fallout from these regulations, I think we both agree that that's an exciting prospect. I'm going to pull up this photo here, because this is basically your opinion about regulations. Is that correct?
Yeah. Yeah.
So, they try to build a wall, and that's about the amount of efficacy. Now, I'm not I think they could do maybe a little more than that, but probably not much higher. They might stretch it a little longer, but I think you'll still be able to jump the fence. And I think
Yeah.
stable coins that are centralized, and this is what we talked about recently, are probably under much of a greater threat
Hmm.
than, say, something like these new decentralized algorithmic stablecoins.
Right. Right. And so I think this is you can notice this a bit already, and this isn't something new. Like if you go onto Coinbase, which is traditionally the informal like arbiter in these sort of legal regulatory situations, they don't allow you to sell you or use USDT even on their platform, and USDT is the largest stablecoin. Um, USDT has been under, Bitfinex has been under investigation by the New York Attorney General since like 2018 or something.
Yeah,
Um,
I still
and so
remember the
that's,
day they announced that.
yeah. So that's
Intriguing.
already been like a known issue in the space. And USDC is pretty well regulated already. And that's, I think like USDC is here to stay. Um, USDT already has its issues, but again, it's like almost too big to fail at this point, I guess. If that makes sense. But like things like DAI and all of these new like algorithmic stablecoins, they really, unless you're making like running your own node illegal, there's really no enforcement possibilities there. And I could be wrong. Again, this is not my specialty. I'm not the most knowledgeable in this legal space,
Yeah, for
but
sure.
that's just my opinion on it.
Okay, fair enough. Um, let's talk about the urn vaults, because you told me
Okay.
something that was interesting about how you avoid. There's like a fee associated with pulling out of the vault, and you've actually
Right.
found a way to essentially put this fee on somebody else.
I mean, yeah, this is a pretty well-known tactic at this point. It's like, if you're sitting in a urn vault, the money gets deployed into there, and then bots sort of come and push the money into the strategies, and they collect like a fee for that. And when there's no fee for depositing into urn vaults. However, there is like a 0.5% fee on the way out. And it was brought to my attention that you can basically piggyback those orders that are sitting in the vaults. I'm not sure about its utility for smaller orders, but like larger orders, you can piggyback your way out with those other vaults and sort of avoid paying that fee if you're doing sort of like a one-to-one transaction. So bots actually take a lot of the smaller orders, like your 20K, 50K orders. But for much larger orders, they sort of sit there for even an hour or two sometimes, and they need to be nudged in. And if you're taking your capital out while that other capital is being deposited in, you can avoid paying that 0.5% fee, which is huge in urn vaults, because that's a good sometimes 2 weeks of farming. So
Yeah,
that can be big.
yeah, absolutely. And I imagine it would add up over time, right? So if you treat this like a business, then you want to take your business expenses and minimize them as you're working, right? So
Right. Right.
what would that be called? Like if somebody watching this is like, I'd like to learn more about that. Is there a name for that? You said it's fairly well known as a strategy.
I'm
Something
not
common,
sure. I would look at Reddit. I'm sure there's some Reddit posts on that.
like how to escape fees while withdrawing from urn vaults, I guess.
Yeah, like urn vault
Keywords.
fees. I'm sure there's Medium articles about it.
Okay. Excellent.
It's
So
one of those things that was transferred to me by word of mouth, so I don't really have a resource to point people to. But
absolutely. Well, I can, we can poke around for that and add it to the description of the chat after
yeah,
on the video. So that's no biggie. Should be, as you say, fairly accessible via Google in that case. And then next, we've got that. We've got that. So we did talk about it's kind of advanced what you do when you have your own node spun up and dealing with the mempools. So maybe not a detailed technical description of that, but do you want to just walk us through that? Because that to me,
yeah,
when I hear that kind of stuff, that's what I'm like, oh shit. I'm not just depositing, withdrawing. Like I'm up against guys who run their own nodes and are just way ahead of everything I do. And so,
yeah.
what does that look like from your perspective?
So this started. There was a launch called Core I'm not sure if you remember that. It was a
I
token
do.
that launched back in September, and then
Big
there were
deal.
a couple. They were unique because they didn't do like a pre-sale or anything. They did an LGE that locked liquidity up, and so you had a like substantial amount. You had like I think they launched with like 300K and locked liquidity, no pre-sale tokens. Only 10,000 tokens ever, and that was one of those projects that was really massive for me, and had a lot of impact on my vision of DeFi, and that made me a lot of capital to work with. And sort of after that, there were a couple more that came out that attempted to do a similar thing with their LGE, which is a liquidity generation event. So you're locking in your ETH, and basically you're locked in an LP token. And so you can't actually withdraw your liquidity. You can sell like your share of an LP token on like a balancer pool, like a secondary market, but you can't actually remove any liquidity from the pool. And so I hadn't quite figured this out yet, but I was in a Telegram group with somebody who basically, when it was called Encore, and it was the second project, it was basically a copy and paste code of Core itself. And this guy spun up his own node with like a Solidity dev so that they could front run the transaction. And they were in and out of Encore upon listing in like 30 seconds. And, it launched at $200 or $300, I think, and they sold at 800. So within that 30 seconds, with just a bot, they had 2.5x their capital.
So
And sort
that's
of
how
after,
they do it.
yes.
Every one of these sales comes out, and I just think, like I've already said to my good buddies too, I said, guys, let's never employ a strategy where it's to buy right away.
Mm-hmm.
Because you will be front run by somebody somewhere. And I always kind of wondered what that looked like on the back end. It sounds like exactly what I expected. Super fucking
Yeah,
advanced.
front running bots are quite a bit more advanced. Where you're somebody is seeing a large order in the mempool, they're buying and then selling that back to you. That gets into way more technical stuff with gas wars. This is you kind of just point a bot at a specific project, a specific smart contract, and it waits. It waits for it to list and then instantly buys, which is great. And after Encore, I sort of tried to find somebody. I had a friend who attempted to make a bot for me for Encore. It didn't end up working out, and so I ended up searching around for a Solidity dev who could sort of do that for me, and I ended up finding one, but I haven't really found a great project yet to point it at, which is unfortunate.
Yeah. Well, I'm sure one will come along. As you say, this space is full of clones, copycats, new iterations of the same
Right.
thing. And it would be just a matter of time given the early success of Core. Now, beyond DeFi, you actually
Mm-hmm.
do trade Bitcoin, trading Ethereum, but you don't do it like I do it. You don't really use TA or charts. And
Mm-hmm.
instead, you focus on order flow.
Yeah, that's a good word for it. I prefer to look at like some people call it fundamental analysis. Um,
Or quantitative.
I learned when I first started trading, like I was taught to stay away from TA as much as possible. I like having simple charts where you have like support and resistances. But I think when discussing TA, the most important thing to understand is why TA actually works.
Mhm.
And that has to do with like how there's an agreement between buyers and sellers at a certain price point. That would be your support and or resistance. And looking at those underlying factors, I think gives you a deeper look into the market as a whole. And so that's sort of how I trade. I use a command line. What I've been trading recently on like FTX. FTX has great perps. You know, in my mind, they're the best, really, for trading anything. And I've recently been trading with a command line interface called Ichibot, which has really been a great tool for doing some of the more technical sort of trading things. Like you can market make by hand, sort of, which is great. You have orders that will instantly deploy based on certain prices. And there's some other smaller, and I could go into this a bit more. There's some other smaller sort of strategies that I deploy when trading on like a centralized exchange, that I think are often overlooked in the market. And in my mind, at least, TA is a very crowded trade, and so I sort of try to um, find out what else I can do. And I have a lot of friends that are, very quant, like they're quant traders or HFT guys, and that sort of forces me to view it from a secondary viewpoint, and sort of adapt my strategies a bit. And yeah, using like a command line interface versus manually clicking through a UI is a lot better in my mind for that sort of thing.
It kind of blows my mind when you show me what your trade looks like, and I just see a bunch of code on a screen and say, why would you trade this way? But I guess what you're saying is, for me to execute the same trade might require X number of clicks.
Mm-hmm.
And you're basically able to just pre-code an order, and then that executes through the UI, but just automatically, or
like, yeah, it executes through a secondary server. And it's actually faster to use this server and this command line interface than actually clicking through a UI. And it hits the order books faster than if you could just do it through the website.
Could you show us any of that, or is that like super private? Like, I mean, I'm just thinking tomorrow I want to learn this, or I want to try this, or somebody watching is like, that sounds interesting. I do a lot of code. Where do you?
Yeah. So each Ichibot is completely public. I can send the link right now.
Yeah. Yeah. Why don't you drop me the link? I'll put it in the chat.
Yeah, it's a completely public piece of software. Learning the code it's really kind of independent as to what your trading style is, like how your code would actually look. But in general, there's a lot of customizable, sort of things that you can do with it.
Absolutely, yeah. I mean, like most things, right? Like most programmers would say, use Linux because then you can make it your own. I am a noob when it comes to all that. I'm not a programmer, if you can't tell. So but I'm fascinated by different strategies, and that's one of the things I try to do here on Hero Labs Live, is bringing in different people from different backgrounds with different experiences. And anyone watching can say, what, that TA that you do RT, that speaks to me. I love that. Other people might be like, I don't believe in TA, but they might pull up this command line and suddenly they're like, holy shit, this. So hopefully that variety today is well received by the audience. And if you guys haven't already, and you're here hanging out watching with us today on this fine Tuesday afternoon, feel free to hit the like and subscribe while we're here midstream. And we are going to get to the markets more directly in a little bit here as we get to the end. It's 20 minutes. So we're going to shift gears shortly and talk about markets. I want to know what Nathan sees on the Bitcoin chart. I want to see what his code, I picture you sitting there reading like the text on the matrix screens, like you don't have your I want to know what you have, in your own form of analysis, and see how it compares to mine. Because frankly, I just don't know what to say about Bitcoin anymore. It's just strong.
Yeah.
So, so we've got Ichibot. Let me get to that link here. Copy link. I'm going to put this Ichibot link in the chats here, guys. So if you're interested, it's something you can take a look at. I can't say I endorse it because I've never heard of it, or until I've spoken to Beat today. But feel free to take a look at that, and I'm sure because it exists, there are some descriptors on how to use it somewhere.
Yeah, that's the link to the wiki.
Okay, perfect.
Yeah.
So feel free to check that out, guys. Actually, I'll put it here in Periscope as well. And yeah, from there, what do you say we shift gears and get into, what's really going on in the market today? So we've talked a lot about your background, how you got into this stuff. I mean, you're young too. I mean, I think I'm like a whole high schooler older than you, which kind of, always impresses me. Not that you have to be smarter to be older to be smarter, but that caught me off guard. After we were first speaking, I was like, man, this guy's smart as hell. Like, you must be older. And then I see you, I'm like, oh, damn.
I appreciate it.
Proof that you don't have to go to a big fancy university and have 10 years experience to learn how to ace these systems.
Yeah, and that's another thing that I've noticed. You see the memes on Twitter about the bell curve distribution of IQ.
Yeah.
And you can either be really smart, really dumb, but being in the middle is never the optimal place. And so kind of being able to view both sides, like the markets can be really simple if you make them simple. Like you looked at Bitcoin in November, and you're like, you could try to sort of use all of these crazy indicators and your MACD and whatever, and say, I think Bitcoin's going to go up. Or you could think about it from like the 60 IQ direction and be like, institutions are buying this, it's going to go up. And
Yeah, supply demand, and don't let too much noise get in the way of what's obvious.
yeah. And that's great for kind of like a macro analysis. And it also, I think, works in DeFi quite well.
Yeah, I'm pulling up the Bitcoin chart here just as you were talking about it. I thought it might make sense to pull it up, John, if you want to flip over. Oh, look at that. Our green box is getting hit like a green screen. You can see through the chart. There you go. Okay, we're up. Yeah, so when all this is happening, and nerds like me are sitting here with their charts, and they're putting lines on things and looking for levels, because and not to take away from TA at all, obviously it's my bread and butter when I go to a chart, because it just gives me levels. It gives me specific sets of criteria with which I can make decisions from. And
Right.
I can, if I can collect data over 50 trades of a certain setup, and I know that on average I'm going to clean up 60% of the time, or in many cases 50% of the time, but my risk to reward, what I get paid on the good days versus losing on the bad days, is 3-1. I can comfortably move along with that plan and know that over time it should grow my account. And in your case, you've found a way to basically bypass all that. And so what is an order flow? I hear about it. It's not my style of trading necessarily. It's not something I pay close attention to and clearly have a full understanding of. How would you
Yeah,
describe that to a
it's
5-year-old?
basically just looking at a lot of it. A lot of the things, I can give you kind of a list of the things. Like when I sit down to trade, I can give you like a sort of a list of how I look at things.
Yeah, a little walkthrough of.
So on a larger time frame, I guess we can start with larger time frames. Even like things like geopolitical events. I know you guys follow like what did you call it, Dixie, DXY.
Yeah.
So for like a good example of this, over the summer, the euro was very, very strong, and the U.S. dollar was consistently dumping. So over the summer, there was a period where it was very consistently profitable. Basically, every day at London Open, you could short Bitcoin, and then close that short at New York Open. Um, and I believe, I don't know if you want to do correlation and causation discussion here, but I believe, that was tied to the fact that the euro was, doing well. So, as Londoners started trading, the same way we look at like DXY and talking about how a strong dollar can adversely affect Bitcoin. It goes the same for other currencies as well. And I think U.S. traders sort of can overlook that the effect in other markets, and that other markets have on Bitcoin trading. And so it was profitable to short Bitcoin at like 5x. You would have made like I think if you had done like a very tight stop, like I think 0.5%, and had a take profit at 1%. You could have shorted every morning at London Open and then closed at 1%, and or canceled your trade at New York Open. And I think that returns something like 100% or so, a little bit higher, I think, over the course of like a month or two.
Really wish we had this conversation a month or two ago, because that's funny. Because our producer John and he and I talk about this all the time. Like it seems like every time I go to sleep, it's 3 a.m. and the market dumps. I'm like, yeah, that's the London Open. He's like, what the hell is the London Open? What is the kill zone? But
Yeah.
it seems like but it's really like morning to them. They're just like, yeah, we're going to move this market. And I feel like a lot of people get the vibe that it's targeting Americans. It's targeting the Eastern and West Coast time zones where it's like, yeah, we know they're sleeping. We're going to move this market. And then when they wake up, we're going to move it right back and just stop them out and then move it on.
Yeah. I
That's
mean, pretty much
fascinating.
like, you can say that about any time zone. I saw a joke on Twitter the other day about how, like, when Asian children are born, they're first given a name and then they're given 10 Bitcoin to market sell. Um, because every Asian hour market kind of dumps. Almost. It's a good bet to make that the Asian markets will dump in the morning, and I think it's more to do with like looking at how those different markets impact, like how their relations go with the Bitcoin market. And that's really not my specialty. I know. I'm sorry. I was supposed to talk about order flow here.
No, you're doing great. And I'm actually following along by pulling up an old indicator that I used to use when I was more trying out day trading, which I generally just don't have the appetite for nowadays. I like to get things done and do other things during the day instead of just staring at charts. But the irony is that I end up staring at charts anyways, just not actively trading them. However, looking here, you can see on this indicator, for anyone who wants to look at it, it's the Bitcoin Kill Zones V2. It's a public indicator. I just added it kind of live, so if you want to watch that back. But you can see here this red ribbon. I don't know if anyone can. I should probably, you know what? Let me know if you guys can see that in the chat. It just occurred to me that it might be a little dark. I could probably up it. Yeah. Okay, look. Give me a sec here. I'll up it a little for you. I know it's tough to see on the dark background. Where is it? Which one of these? Oh, well, you get the red one. So this red ribbon right here is the London Open. And the end of this band over here on the right, the yellowish one, is the London close. And so basically what you were spotting is in order flows, and generally it was that overnight session where you could reliably capture a few percent down move. And I mean, you can see it here on the chart. I mean, that's pretty sick. That's the London Open. That's the London close.
Right.
And each time open to close, just as you say. This obviously is a part of the chart that I chose. Let's go to the next part. About break even, down a little, obviously down here. But I assume you're not doing that in the face of like a big rip face bull.
Yeah, exactly.
You're
And
probably a little more
obviously, like, overall market momentum obviously has a bigger impact than this. This was when we were having a really boring summer, and things were really just ranging.
Oh, okay. So I'm in the wrong month here. I'm in like November. Let's go back to what?
Yeah, I'm talking about like June, July,
June.
August. Not June so much, but like July and August when things were really boring.
Oh yeah, during the big consolidation, which started here, looks like, or at least some of it there. Did we lose your sound? There we go. Okay, yeah. I mean, you can kind of see it. I mean, in general, when you guys paint this on your charts, it's pretty cool. I did love this tool when I had it, especially when you're like trying to think of timing a trade. You're thinking, okay, well, here comes the open. There should be volatility. If we're looking bearish, I can expect downside.
Right.
Capturing that, and then even having an idea of when you want to close the trade. Sort of seeing the world for the sessions that exist within it. That's something not a lot of people do.
Right. Yeah, and so on smaller time frames, I really look at like order books and stuff. I even like, I'll trade I'll sit down, I'll be bored or something, and I'll sit down and trade for like an hour or two, and not even look at a chart. I'll just look at the order book without even pulling up a chart, and just have Agger.trade, which is, shows you all of the orders coming through. It makes some really nice sounds when new orders come in, and that's really useful. Like, you can see sort of market's momentum as it happens, and how that sort of directionally trades and changes things. And that's really what I like looking at when I'm scalping, I guess. Market in, market out on high leverage. I know it's not advisable as like a sustainable real strategy, but
it may not be a beginner strategy, but I mean, we're here to service both crowds. I think there's a lot of people here who have a pretty well laid out trading plan, and we're looking for just ideas on what to trade with our plan. And then other people are likely finding themselves as traders And so again, the variety, I think, gives a lot of people things to chew on, and then where they want to maybe research a little more. So
Yeah, absolutely. And sort of, I guess it's one of those things that kind of comes with experience trading. You know how an order book should react to large orders. So you're putting an order in, and you can almost feel like you're if you're trading with large positions of like 600K, $1 million, leveraged, of course. Um, you're putting those orders in, and the market should move with your order, unless you're really just being hunted or somebody else is playing against you. If the market it doesn't feel right, it usually means somebody is playing against you who's larger than you, and you should probably exit that trade pretty quickly.
Yeah, that's a funny thing. I saw a tweet yesterday that just said, if you ever get limit filled on FTX, then your entry is wrong.
Yes.
And that really spoke to me, because in particular, those order books on FTX, they just sit there and there's huge orders sometimes, and then you move in and they move away from you. I mean, you're very much trading, it seems like. Obviously, there's a lot of retail on there now. They've got a lot of volume as well. But I feel that. And then, you get your fill finally. Like, it'll just sit there forever, and there's shit moving all around it. And then suddenly you get your fill, and you're like, oh, fuck.
Yeah.
And then it runs against you. You're like, oh.
Yeah, you get like a little panic there.
Yeah.
But also, like you mentioned there, the bots are exploitable as well. Spoofers, I like to call them. Spoofing the order book with fake orders, kind of.
Yeah.
Ichibot has a great, there's a way to do this with Ichibot, where there's these spoofers that aren't expecting to get filled, and you can sort of code something up through Ichibot that will fill them, and basically they'll be caught off sides, and they'll need to exit their position as quick as possible, and you can kind of take advantage of that, them panic selling there or closing, covering their order. They might have wanted to get filled on like 10,000 contracts, and all of a sudden you just filled them for 300,000 contracts, and now they need to go dump that.
And that could be your exit liquidity, presumably.
Yeah, exactly. And you're taking advantage. It's very small. Maybe like 0.3% on something less liquid, maybe 0.5, 0.7%. But taking advantage of that tiny little window that you have to get them off sides and then take their liquidity as your exit is advantageous.
Yeah, if you can get through all the fees and figuring out all the slippage and the nitty gritty and scrape out a couple percent doing that on a that's yet another strategy, a little bit advanced for me personally. Like, I'd have to really dive into that one and learn a lot more about it. But is that something you've spun up already with Ichibot, or you've just heard it can be done? Or
I've heard it can be done. I've tried it out a little bit. I haven't had all of that great success with it because I haven't invested enough time into exploring that. I know that is a pretty high level, at least in like the TradFi market. My friend works at an HFT firm, and that's a strategy that they actually use. Obviously, it's on a different level entirely. They're talking nanoseconds, and I'm talking human reaction speed. But it's certainly a way to trade. I don't think it's advisable for everyone, and I think there's a lot of risks that come with that, but it is a way to trade.
Absolutely. What are you looking at today? So somebody who's watching now, they've stuck around, they're like, okay, guys, there's a lot of these advanced strategies. We've been talking about them today in the market. Are you short? Are you long? What are you seeing that might give us some ideas we can chew on, myself included? Because I'm in a few trades, but nothing too leveraged, certainly no leverage at the moment, but some spot stuff, some LP. What are you seeing?
I'm currently farming. I'm looking at some of these, basis dollar, basis cash. Currently, they're doing like a really good one is you can do basis dollar vault. They have an ESD vault, so they have an empty set dollar vault, and you can deposit your empty set dollar in there. I think the APY is somewhere around 500% right now, which is great for a stable coin. You're getting 500%, and that's yes, right there at the bottom.
Oh yeah, the earn BSD with ESD.
Yes. What's the APY there?
528. Yeah.
Yeah. See, that's a great APY. Yeah, it's over 10% a week, which is massive if you really think about it. And that's extremely simple to do. You know, you're not exposed to impermanent loss there. You're just staking it, and it's a audited contract, and it's reasonably agreeably safe to be in there. You can also purchase insurance if you really want to.
Interesting. And yeah, you can see the TVL is still low. I mean, comparative to the other groups, it's almost 1,200% up just to the next sized up pool over here.
Right.
So at this point, that's valuable. And then obviously after today, people watching this, if anyone apes into that, that is going to cut into that APY gradually.
Yes.
Well, I appreciate you sharing, because I think a lot of people who do these farm plays are like, stay out of my pools.
Yeah, I mean, it's at this point, it's not one of those brand new farms that, and I really haven't. I would share if I had some, but I really don't have any brand new farms to share that I can put my word on. But in general, I am looking or leaning a bit bearish on the market as a whole. I think seeing some sort of catalyst for downward movement is highly probable here. And when you're up at levels like this, I mean, people are incredibly leveraged right now. In a long position, people just keep adding leverage and adding leverage. And when that happens, as soon as you get an impulse move downwards, you'll get cascading liquidations, and that just sort of becomes like a negative feedback loop where you just keep liquidating, especially when we are so highly leveraged at this level. I wouldn't be surprised seeing a massive downward candle at some point.
And that's a good point. I mean, obviously that's something we talk about all the time as far as like when to deploy new capital, and you tell people, well, don't FOMO, and a lot of people, myself included, historically, they'll say, yeah, no, I get it, patience, I won't, and then without realizing it, you're up into this high part of a range, or in this case, basically at the all-time highs, and you look and you're like, holy shit, I've been scaling in at the dips, like I'm super leveraged on this right now, maybe not with leverage, but as far as exposure. And so when that dip comes, it is very difficult to capitalize on it, because either you are so leveraged up and you have that profit baked into your position, so then you are more inclined to try to take that profit even if it just got cut in half because you waited for the dump. And I'm just speaking in terms of like what I see as behavior for a lot of people. And one of the things I always talk about is like, hey guys, like find levels and follow price up, because you can see during bull trends that you get those retests. In this case, we got the retest here, moved up again, arguably got a little retest there, got a little retest here, got a little retest here. And so, asking yourself, what side of this trade do you want to be on? And so in this case, I mean, I do see a very clear and obvious level here at 20K. I would be shocked if we never touch that ever. I mean, I would be absolutely shocked. I think the probability of tagging 20K at the very least before we see some ridiculous upside that people want to see, in the six-figure levels.
Right.
So, I mean, at that point, you may have to sit through something like this and something like this, and then it's like, oh, and then it's boosh. Yeah. Like whatever that looks like leading up to it. I mean, I'll delete my Twitter account if we never hit 20K again. Like it's that kind of. To be fair, tweets. It's like, if this doesn't happen, I'll delete my Twitter account. It's like, okay, dude, what a high stake you put on that. Thank you.
Yeah, I agree.
But that kind of meme joke, like it's got to happen. It's too big a level for them not to squeeze it, touch it.
Right. And we have a massive, massive amount of options expiring on Christmas Day as well.
Oh.
I could be wrong. I could be wrong with this figure here, but I think it's 1.3 billion or something. I mean, massive amount that are expiring on Christmas Day. So I think at the very least that'll bring some volatility.
Yeah, and for those of you who don't know, and I've seen this time and time again with Brian Beamish looking over options tables over on the TRI, and he's in the major markets, like in legacy markets, and he's looking at S&P futures or options, and he's like, oh, I bet they're gonna they got a huge pool, just say of like puts at 300 or whatever the numbers are, and he's like, okay, we're probably gonna push the market up into that date. so that all those expire worthless, and then they're going to bring it back down. And so when
Right.
you guys hear about options expiries, I can't get into it obviously in depth because it's not my forte, but generally speaking, there is incentives based on which options are out there, open interest in options. There's incentives for the writers of those options to push the market into a place where it gives them the best return. And if you are the mover of the market, you can do that, which is pretty sick.
Yeah, and usually traders, options traders are, options are incredibly complex financial instruments.
Yes.
They're really not
I even took a
something.
course on them and I still don't want to trade them. I'm like,
Yeah, exactly. And I feel like, you have like the memes about, your Robin Hood traders just YOLOing Tesla calls. Um, even as, somebody who's been in the market in the crypto market, I should say, for 5 years now. I don't even mess with options. I don't understand them. I don't pretend to. The only time I'll use them is like a hedging out volatility for being like an LP, but that's a completely different strategy. But
yeah, I mean, I've started learning about them and playing with them on Hxro with the Tix Wix. I mean, that's the first time that I looked at it. I was like, okay, this makes sense to me.
yeah, I have used those. Those are amazing. I actually love those. They're very fun. But so my point here is that options traders are usually in the more advanced category of traders. So they often use there's a lot of alpha, I think, in my mind, that can be extracted from sort of watching how the options order flows are going and watching those markets.
Okay, so Christmas Day, I will mark on my calendar here. If nothing else, because I'm curious. I mean, that's pretty soon. If you're looking at the daily, that's a couple days away.
Yep.
So, how are you playing that? Is it risk off for you until that comes in? Is it, if it rallies up into that event, you can expect it to be the pivot, and then it's like, oh, options expired, and then it's let's just shake it out for a little bit, and then and then it's bull market time, or like how are you looking ahead to this options expiry?
See, I'm much more of a reactionary trader. Than I don't have a lot of stake in the market, in the sense like I hold Bitcoin and ETH spot, right? Apart from like hedging out that exposure when I think that the market's going to go down, if I'm trading it, I kind of wait to see how the market reacts to these sort of events, and then be one of the first ones to react and follow that trend. Or if I miss a move, I like to take the counter trade there. So if Bitcoin ends up dumping off of this event, then I will be right in there to buy the dip. This is buy the dip season. The clearest buy the dip sort of event that we really ever had.
Arguably,
yeah, with just like the institutions and I'm sure there are lots of institutions sort of waiting for it to be back under 20K. And if you're selling your Bitcoin spot, that's who it's going to. It's going to the big boys.
Yeah.
And
gobble,
so
gobble,
just
gobble.
right. And so I think it's important to remember, like, if you miss a trade, it's not the end of the world. This market is going to keep on going. It's going to keep on chugging, and just make the best of it. So if you miss that gigantic short or that gigantic long, take the opposite position if you feel comfortable. If you think the market's going to go back up, then you take that counter position and go long, and you'll make just as much money as if you had shorted it.
Yeah, I mean, assuming that it's like a pivot, like dump and go or pump and dump, like if you can catch that pivot, I mean, that's tricky trading. But I guess you're speaking more, but to do with spot positioning, right?
Mm-hmm.
Sounds a bit dart throwy for leverage.
Right. Yeah. And again, like, there are people, and this is like one of those scenarios where I think TA does have some benefit. But as I don't consider myself a swing trader or a trader in general, and so I kind of just wait these moves out as much as possible. Maybe like a 20x leverage short or something, if I really think we're going to dump. But apart from that, I kind of just wait, and most of my money is made, in the trading market. Most of my money is made in like reactionary plays.
Yeah, no, that's fair. I think So we're just after the top of the hour. I think we will head towards wrapping up. I mean, the only real trade I made on my futures account this week, other than getting stopped out on one XRP long, which was a bot setup, and that just is what it is. Chalk it up. That thing hits, I think, 55% of the time for me. So this was not one of the good ones. But other than that, I'm just an opportunity trader. So if I see my setup come in, Bitcoin looks strong. I think it's going to go up more. I'm holding my spot. I've got some other exposure. But when I saw this, Sunday night, I'm going to dinner and I see things it's a pretty strong dump. I mean, this one candle enclosed like 1, 2, 3, 4, 5, 6, 7, 8, 9 preceding candles, right? That was significant. And so I was like, oh shit, I should have probably been thinking about shorting 24K. Well, little did I know, after dinner, when I got back home, we were sitting back up at 24,000. And I just told myself, you know what, if I'm not shorting that, what risk reward am I looking for? I mean, I've got the all-time high right here. I've got a strong dump down. I've got a weak ass climb back up with no volume.
Yep.
And we're coming into Monday, which was like the Jupiter Saturn cross, the winter solstice, all of those, these things we like to laugh at, this astrology stuff. But say what you will, I mean, market pivots come in on things like that often, and whether it's a self-fulfilling prophecy or not. So, I did get a short off there. I actually woke up and it was at this. I was like, holy shit. But by the time I got to my computer, it was up a bit and I closed it out around here. And just kind of is what it is. And I think if anything, I don't have much of a long setup here, unless I want to it's breaking out, the volume's rising, we're going higher. And then you can jump in for a fairly quick trade. But as far as positioning myself goes, I'm long in spot exposure, but I am always watching these levels for an opportunity to short. If nothing else, just to get sort of a hedged, position on. And that's like portfolio insurance. That might cost me a couple grand if it goes against me, but it'll hedge out the rest or in, whatever percentages you guys want to talk about. But for now, this is really strong to me. This green line is not a support resistance. It's actually just an old chaos level that I drew on here. But yeah, so, I mean, that's how I'm playing it. Mostly focused on certain algorithmic stable coins at the moment. Shying away a little bit from just focusing on futures and perps and all that stuff. And if you take a chaos level from this summer, you end up with this number here, which we just passed through and retested. So yeah, I don't know what to think. I mean, I don't think predictions are worth too much. I think it's a lot about setups for me. As much as I wish I could say, I think we're going to go higher. I don't know. I'll tell you, if we break above this level, I'll be hunting for rising volume and a breakout potential, and there's a trade right there for shorter term. Like I said, if we kind of come up here on bearish divergence and M out, I'll be looking to short, risking against the highs. And
yeah, I mean, you won't know until you know.
Exactly.
Basically, you can say whatever you want. Nobody knows until they know.
Yeah, and there's going to be some surprises over the break. I would not be shocked at all if we see some fuckery, like you say, big options expiry, Christmas Day, end of the year, holiday time. Is the retail going to move into the market because they're all sitting at home and there's lockdowns everywhere and everyone's online, and we're going to see some altcoins pop off and get this kind of scenario that I like on ETH BTC? That's possible. Is the options expiry going to get rallied into and then dump, and then we just have like a boring, shitty pullback start to the year? That's also possible. So it's not always what people want to hear, but at the end of the day, like you said, maybe simplifying is best. There's more demand for Bitcoin right now than there is supply.
Yeah, absolutely. I mean, that doesn't mean that we can't go down. And I think we do at some point go down just because of how leveraged we are, like I said. But, I don't think it's going to be a doom. I don't think we're having another doom scenario. I think we have at this point, institutional interest that far outweighs, really anything else in the history of the crypto market. And I think that's massive.
Yeah, like Bitcoin's here to stay. So let's just, take it easy, not try to time every move. Make sure that we maintain our longer term thesis, even in the face of sharp downside. But you can only do that if you come in from a position of strength. So if, unfortunately, you get things like the new 20K highs, and suddenly people who were just kind of playing it safe, maybe now they're doing things like taking out loans, things like, borrowing money, reeling in other people to help them get more Bitcoin.
Yeah.
And that's where I think you set yourself up, like you said, for that pullback.
And then
that's money
you get really emotional too. You get the emotions that come with that as well.
Big time.
And that can really affect your trading.
Yeah, well, you can't afford to hold to 13K or 12K or whatever
Exactly.
number you want to say is the pullback. I'm not calling for those numbers, but they're still on the table. I mean, we can't take those kinds of technical retrace levels off the table, because the bottom line is we are super bullish, and I still think that it's going to be tough for the institutions to be like dumping 2,000 Bitcoin because they're not as confident anymore. They can just buy them back. Gobble monster account gobbles up monster account B's stack. Like they're battling each other now. So there's that scenario. Maybe we never do. But I know that there's a lot of people in this market that have just joined in the last few months because number go up. And if number does not go up, they will sell. And how much of percentage of the Bitcoin that's out there is in that category? I don't know. But we're probably going to find out sometime in the next few months. We'll see. So as always, managing risk, staying one step ahead of the bullshit so that you can be buying the dip instead of getting liquidated on the dip. Those are kind of the things that I like to focus on here. So as we get to the top, let's take it back to the studio here. Really appreciate you coming in and spending the time with me today and kind of walking us through your DeFi sort of life, and super impressed with what you've been able to achieve at really at any age. But I still go back to the fact that you're young, spry young fellow, and I look forward to working with you in the future and learning more about this DeFi. I think the 2.0 that's coming out is really exciting. Just bought into a pre-sale last week actually that launches later in the spring. Can't wait to talk about that and teach about that. I think it's going to be huge, and it is that. It's grabbing DeFi 1 and leading it up to a DeFi 2.0. It's going to be great.
Yeah, great. Thank you for having me on.
And for anyone who wants to follow up on some of the ideas that we've discussed today, feel free to hit us up on Twitter and in the trading pit, which the link is in the description. So if you guys ever want to just chat, you can ping me in there. We can talk some charts. I know we didn't cover a lot of altcoins today, but honestly, until ETHBTC puts in a floor, I don't want to touch the altcoins that much. So I don't know. We'll see. Have a wonderful week, guys. We're going to be live tomorrow, Nick and I, on our usual stream. So we will cover a lot more of the altcoin stuff there. We can talk about it. But until next time, guys, always play from a position of strength. Take care.